all about tax deductions for vehicles. So tax deductions for automobile expenses. I was putting this slide deck together this morning, and I came across this picture of Lightning McQueen when I was looking for photos to put in the slide deck. And if you don't know, Lightning McQueen is the main character from the movie Cars. All right, there's three Cars movies. I know that because my kids absolutely love Cars. And if you'll notice, what's interesting is that this is an actual replica, like a real life replica of Lightning McQueen. And I have to tell you, if my kids actually saw this, they would absolutely lose their minds. So had to put it in the slide deck. So what's up, everybody? Chris Hervochon here with SOAR, A Better Way CPA. Let's connect. Chris, abetterwaycpa.com. Phone number 843-608-0298. You can find me on Facebook, LinkedIn, Twitter, and Quora, where I post new and unique content every single day. So let's engage. If you have any questions, ask away. We would be happy to answer your questions live as I'm going through this. But if you're watching this on recording, by all means, put some questions in the comments. Happy to go back and answer those later if you so wish. So what's the problem? And I get this all the time. So you drive your car for business, okay? Or your business owns a vehicle, and you want to know what you can do to write that off. So you want to save some money. You want to write it off. You don't know where to start. And questions abound. So you got two options here. Standard mileage rate. So we're literally filing tax returns for 2018. It's tax season. So for 2018, the mileage rate was 54.5 cents. For 2019, that is going to be 58 cents a mile. So we would generally expect that to go up for 2020, but we'll see. It changes every year. So the IRS does a study every single year, and then they change the mileage rate accordingly. Or you can use your actual cost of operating that vehicle. So here's the big question. Should you use mileage or actual expenses? Well, it depends, right? So you should probably calculate this both ways, and you should ask your tax preparer to do so. Model it out and then see which one is going to be better for you. So here's what I'll say. The mileage, it's going to be less burdensome to track because you're basically just taking the number of miles you drove for business and putting them on your tax return, assigning the mileage rate, and 54.5 cents, 58 cents, whatever it's going to be, whatever year, and you're pretty much done, right? While actual expenses, it's going to be a little bit more burdensome to track. You've got gas, oil, like oil changes, repairs, tires, insurance, registration, depreciation, or your lease payments, either or. You can't take both. And then the one thing to note here, you'll see at the bottom of the slide, tolls, parking, and the personal property taxes that you pay when you actually buy the car, those are separately deductible. So we're not worried about that. We're just talking about the actual expenses to operate that vehicle, which is your gas or oil and repairs and all that good stuff, right? So Are you still able to itemize mileage after tax reform? Good question. Nope, can't. Gone. Unreimbursable or reimbursable employee expense. Unreimbursed employee business expenses. The deduction for that, the itemized deduction for that, has gone away after TCJA. So Tax Cuts and Jobs Act, tax reform, as it's commonly known as. But your employers can still reimburse you for mileage. So that's non-taxable to you as an employee. It's a write-off for the employer. So the last point here is that you may, if you're somebody who drives a lot for work, a ton, and your employer doesn't reimburse you for that, there may be some room for negotiation with your employer. It may be beneficial to you if you consider taking a lower salary and having your employer make up the difference with the reimbursement of your mileage. It could benefit you from a tax perspective. It could benefit your employer from a tax perspective. What you need to do is basically model that out and negotiate that out. And in that sort of instance, I would definitely engage with a experienced tax professional to do so, an experienced accountant, and hopefully that's something that your employer would accommodate if you are in that situation. So in order to take the mileage deduction, you need to keep a mileage log. This is very important. So, the mileage deduction is a good way to get, a question from the IRS. Generally, if you've got a good log, you're good to go. No worries. If you don't have a log and you're trying to take that deduction, yeah, I wouldn't. That's not good. Not a good idea. So what are the components of a good mileage log? The date that you traveled, where you were going, purpose of your trip. So who are you going to see? Why are you going to see them? That sort of thing. Your odometer at the start, your odometer at the finish, that will give you your mileage. So number 5 there is your total miles. And then your related expenses, so your tolls, parking, stuff like that, which, as I told you, would be deductible separately. So the other thing to note, this is only for business-related mileage, okay? Business-related activity, this is not for personal activity, because that is not deductible. So how do you keep a mileage log? Well, you could scribble it on the back of a napkin. I absolutely positively do not recommend that. You could go with something like Excel, just set up a simple Excel spreadsheet, track it every day or as you're traveling or whatever, because Excel, you can now get it on your phone. That's really not ideal, to be honest with you. There's just easier ways. QuickBooks Self-Employed has it built in, mileage tracking. Number 3 here is MileIQ. That's the one that I actually refer to my clients all the time. If they ask me, I always tell them MileIQ. I happen to like that app. It'll track your mileage in the background. And it's a good thing to note if you have Office Business 365. So if you've got a company, a side hustle, or small business, whatever it may be, and you have Office Business 365, that's the cloud version of Microsoft Office. MileIQ is included, so there's no extra cost, and why not use it, right? TripLog and GoFar, those are 2 other apps similar to MileIQ. I will say I have not used them, but the reviews are pretty good, so it might be worth looking into those. But bottom line here, if you're going to have to track mileage to take the deduction, I would absolutely go with an app. Okay, some sort of an app that'll do it in the background for you, where basically all you have to do is classify it as business or personal, and good to go. So here's another good question that I get all the time: should you buy your car or should your business buy your car? So unfortunately, the answer here also is depends. So there's lots of factors to consider. Every situation is different. And this is another situation where you should engage an accountant, an experienced accountant, to model this out for you. And absolutely before, don't do it, not after, before you go and buy your car, okay? It's always more beneficial to pick up the phone, call your accountant, send them an email, whatever it's going to be, tell them the facts and circumstances and work through it before you go make these huge life choices, right? And getting out in front of these things is always better. So here are some things to consider. So loan interest is deductible for your business, but it is not deductible for you personally. So if there's going to be a heavy loan expense involved here, that's one thing that needs to go into that model. So if the business owns the car, you need to track personal mileage, not business mileage. It's the exact opposite. Okay, so you need to segregate out that portion of the expense which is going to be related to your personal activity, because again, not deductible. You should consider insurance. Insurance, generally speaking, is going to be more expensive for a business vehicle than it is for a personal vehicle. So just one more thing to consider, one more thing that goes into the model. Now, here's a really interesting thing. So we all know that in today's economy, the gig economy, the remote work economy, a lot of people are working from home, and they may drive a little bit for business, but not as much or not very much. Maybe they hardly drive at all. Especially if you're living and working from your home in an urban area, maybe you hardly drive at all. So there could be a really big advantage to having your business buy the car in that instance, because then you can utilize the actual expense method, take the depreciation, you get the interest, you get all these things for the actual expense of maintaining that car. And in reality, it's you're not using it very much, so it kind of works out. There's a big delta there. Whereas if you're taking the mileage deduction on that and you're hardly driving, you're hardly going to get any deduction at all. So, that's an interesting planning opportunity. So last question that I get kind of frequently, should I buy or lease? So leasing, generally speaking, comes with some mileage restrictions, right? You get 12,000, 14,000, 10,000 miles, whatever it may be that comes with your lease agreement. It's hard to get them to go to like 30,000 miles if you're going to drive a lot. So one thing to think about. I think primarily for taxpayers and business owners, this is more of an especially for small business owners, this is more of an affordability or a cash flow issue than a tax issue, right? So what do I mean by that? Well, how much is the down payment going to be? How much is the monthly payment going to be? What's the residual value of the vehicle going to be? These are all important questions when you're just starting out in business. Maybe your cash flow is not as strong as it's going to be in a few years. Maybe you're just running a really tight ship. Maybe whatever the issue is, any number of issues, but cash flow and financial stability for small businesses and micro-sized businesses is one of the biggest considerations. And so from that perspective, the lease versus buy thing is definitely, I think, it's more important to consider those cash flow type issues than the tax piece. You should consider both, don't get me wrong, but I would look at it from that angle. And as you'll see in number 3 here, there's no simple answer here. Again, engage a qualified accountant, have them model it out, and then talk through these issues, right? What's your cash flow look like in your business? Should you have the business buy the vehicle? Or should you personally buy the vehicle? All sorts of things. As I've talked about for the last 11 minutes here, there's a lot of factors to think about around vehicles. You want to make sure that you're considering all of them, you're modeling them out, and then you're making the most informed decision that you possibly can and getting the best tax benefit, number one, and then also putting yourself in the best financial position, irrespective of taxes, okay? And then finally, no commuting expenses. Commuting expenses are never, ever, 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 ever tax deductible. Never. Commuting. Nope. Negative. Nothing. So that's my last thought. Okay. Anyway, that's all I have for today. Hopefully that's a good overview for you of the tax deductibility of vehicles. As always, let's connect. Chris at BetterWayCPA.com. Phone number 843-608-0298. You can find me on Facebook, LinkedIn, Twitter, Quora. Actually, you can find me on Instagram and Pinterest now too. So I'm going to have to update this slide going forward. But you can find me. I'm around, I promise. So if you like this video, please, by all means, like it, share it, subscribe to my YouTube channel. That helps me to grow my audience, helps me to grow my business. I certainly appreciate it. And thank you for watching, and I appreciate you, and I will see you next time.